The economy is booming like never before. We've shattered every expectation, Trump said earlier this week, grinning ear to ear like he just invented GDP. But here's the problem. The actual numbers don't back that up, not even close. Today, I'm doing what I always do when Trump makes a massive claim with zero proof. I'm asking ChatGPT to fact-check it all. No fluff, no bias. And then, just like last time, if you're wondering whether Trump's economic miracle is real or just more campaign smoke and mirrors, this is the breakdown you need. And trust me, you'll want to stick around for the prediction part, because ChatGPT usually doesn't hold back. Real quick, if you're into bold, AI-powered breakdowns like this, hit that like button and subscribe to the channel. I post new videos, and you won't want to miss what's coming next. Gather all the latest info on Trump's claims that inflation is over and the latest developments so you're fully up to date. And then I'll start asking my questions. Don't write anything yet. Just let me know when you're ready. Be clear, straightforward, totally unbiased. Call a spade a spade. No spin, no fluff, no sugarcoating, no links, no headlines, no headers. And always give your own take on whatever I ask. Now, I want you to analyze everything related to Trump in this case, and tell me what you think. Is there anything that could actually land him in hot water, or not? I want you to make an educated guess, based on everything you know. Be as detailed as possible, around 1,000 words. Your thoughts, your analysis, your honest take, no headers. Donald Trump's claim that inflation is over is more of a political talking point than a serious economic analysis, and it ties into a broader strategy of rewriting the narrative around the state of the U.S. economy as he heads into the 2024 election season. The statement doesn't align with current economic data or the lived experiences of many Americans. More importantly, Trump's messaging around inflation, combined with his policy proposals and recent statements, creates potential legal and political vulnerabilities. Not necessarily because of the claim itself, but because of what he's promising and how he plans to get there. Inflation in the U.S. has been falling steadily from its 2022 highs, largely due to Federal Reserve rate hikes and global supply chain stabilization. However, it is not over. Core inflation remains sticky, food prices are still high, housing costs are a long-term problem, and wage growth hasn't fully outpaced price increases. When Trump says inflation is over, he's attempting to take credit for a process that happened under Biden, while simultaneously promising drastic policies that could actually reignite inflation if implemented. This contradiction is glaring and may not hold up under scrutiny. Now, as far as Trump landing in real hot water over this, if we're talking about legal jeopardy, no, he likely won't face legal consequences for declaring inflation is over. Misrepresenting economic data isn't a crime, especially for a politician. They do it all the time. But when we broaden the lens and look at his surrounding economic agenda, his tariff threats, and the implications of his second-term promises, that's where potential problems begin to appear. Trump has been loudly promoting a universal 10% tariff on all imports, and in some cases floating even higher rates. This is being pitched as an America First economic reset, but in reality, it would function as a massive tax on consumers. It would increase prices on everyday goods, electronics, clothing, food, vehicles, and likely spark inflation all over again. Economists across the political spectrum have warned that such a move would create a significant inflationary wave. If he were to implement this and it triggered a surge in prices, the political backlash would be immediate. Businesses, global markets, and working-class Americans would feel the pain quickly. While that still wouldn't be illegal, it could turn into serious political trouble and erode public trust, especially if the earlier claims that inflation is over are used against him. The deeper concern is that Trump is setting himself up for a credibility collapse. If he wins and inflation spikes under his tariff regime, his earlier rhetoric will look delusional or dishonest. This opens him up to attack not only from Democrats, but also from conservative economists and business leaders who value fiscal predictability. Some of his donors in the business world are already uneasy with the tariff talk because it threatens global trade relationships and corporate margins. That division inside the GOP could widen if Trump charges ahead with policies that backfire economically. Another issue is the way Trump and his allies are attempting to discredit or replace independent economic institutions, like the Federal Reserve. There have been growing signals that Trump intends to exert direct control over the Fed if he's reelected. That includes appointing loyalists who will keep interest rates low regardless of inflation trends. If that happens, and inflation does resurge, the lack of credible monetary policy could make things worse. Markets react badly when they think central banks are being politicized. It could trigger capital flight, hurt the dollar, and push up borrowing costs. If Trump promises low interest rates and delivers inflation instead, he owns that failure. Again, that's not criminal, but it could seriously damage his reputation and presidency. Now, to address whether anything here could actually land him in hot water in a more serious way, legally or otherwise, the short answer is no. Unless he crosses a clear legal line, such as manipulating economic data, coercing Fed officials in a criminal way, or profiting personally from tariff policies through insider deals. So far, none of that has been proven. But the risk isn't zero. Trump's past presidency showed a tendency to blur the lines between public office and private gain. If there were any evidence, for example, that he or his allies were investing based on knowledge of upcoming tariff decisions or manipulating markets for profit, that could become a legal issue. But that's speculation, unless real proof emerges. Also, Trump is still under multiple indictments and civil cases unrelated to inflation, but public perception matters. If his economic claims start looking like lies or pipe dreams, and if people feel financial pain under his leadership, his legal troubles could be viewed through a harsher lens. Voters might be less willing to give him the benefit of the doubt, and prosecutors might feel less pressure to tread carefully. One more thing worth mentioning is the psychological game Trump plays with statements like, "Inflation is over." It's a form of narrative control. He's trying to get ahead of the news cycle and plant a simplified, catchy message in people's minds. Most voters don't follow economic indicators, but they do remember sound bites. If enough people feel like prices are stabilizing, even if they aren't, he wins that round of messaging. But this tactic only works in the short term. Over time, reality punches through. If voters walk into a grocery store and still feel squeezed, no amount of slogans will change their minds. This is the real risk Trump faces. His messaging strategy may overpromise and underdeliver, and that gap between words and reality is where his vulnerabilities lie. In summary, Trump is not going to jail for saying inflation is over, but the entire strategy around that claim is built on shaky ground. If he wins and enacts his policies, and they blow up in his face, especially the tariffs and Fed interference, then yes, he could land in serious political hot water, maybe not in a courtroom, but certainly in the court of public opinion. And in today's world, public opinion is powerful enough to make or break a presidency. My honest take? The claim is hollow. The policy risks are real, and while the legal danger is low right now, the political fallout could be significant if reality doesn't match the rhetoric. I asked ChatGPT to break down what Trump's economic moves really mean for the next 100 days. Like, where's the US economy actually heading? GDP? Jobs? Inflation? Confidence? The deficit? What's coming next? Here's what it said. Based on current data trends and Trump's economic actions, predict what might happen to the US economy over the next 100 days. Cover likely outcomes for GDP growth, inflation, job creation, consumer confidence, and deficit. Base your answer on historical precedent and current indicators. Here's ChatGPT forecast for the US economy over the next 100 days, about 3 months from today. Based on the most recent data and likely trends, over the next 100 days, the US economy is likely to enter a slower, more fragile phase. We're not looking at an outright collapse, but we are seeing multiple signs of strain, and Trump's rhetoric and potential policy actions could aggravate rather than ease the situation. Starting with GDP growth. Recent quarters showed some resilience, mostly driven by inventory restocking, government spending, and preemptive importing to avoid possible tariffs. But that momentum is unlikely to last. Consumer spending is cooling off. Business investment is becoming more cautious, and global demand is softening. There's no major catalyst on the horizon to drive a strong growth rebound. If anything, uncertainty surrounding trade policy, particularly Trump's floating of a universal 10% tariff, is likely to weigh on business planning. Historically, when tariffs are threatened or implemented on a broad scale, companies delay capital investment and hiring. So over the next 3 months, GDP growth will likely taper down from a 2.5% to 3% pace towards something closer to 1.5% to 2%. That's not a recession, but it's a slowdown with downside risk if policy decisions are erratic. Inflation is not over, regardless of Trump's claims. In fact, we're entering a volatile phase. Headline CPI has cooled significantly from its 2022 peaks, but core inflation, especially in services and shelter, remains sticky. The Fed has not yet declared victory, and if Trump's tariff plans get even partially enacted, the impact will be inflationary. Tariffs function like a tax on imported goods, which translates to higher prices for consumers. In previous trade rounds, especially during 2018 to 2019, we saw inflation creep up in categories like electronics, appliances, and some food products. If similar policies return, we should expect to see month-over-month price increases, especially in Q4. So the most realistic short-term scenario is that inflation ticks slightly upward. Nothing catastrophic yet, but enough to prevent the Fed from relaxing its stance. That puts inflation in the 2.9 to 3.1% range over the next 100 days. Job creation is slowing. The labor market isn't collapsing, but it's cooling fast. Job openings are down. Hiring has decelerated, and wage growth has stabilized or even dipped in certain sectors. Most of the low-hanging fruit from the post-COVID jobs recovery has already been picked. At this point, adding more jobs depends on business confidence, and that's shaky right now. If businesses anticipate higher input costs from tariffs and tighter credit conditions due to persistent Fed hawkishness, they'll pull back on hiring. So in the short term, we're likely to see net monthly job gains drop closer to 100,000 or below. Unemployment, which has ticked up slightly already, could rise toward 4.3 or 4.4 by the end of this 100-day window. It won't feel like a labor market crash, but it will feel like stagnation. Consumer confidence is already fragile and will probably get worse. Gas prices, food costs, and housing remain persistent stress points. While inflation has cooled on paper, the average American doesn't feel relief. People still perceive groceries as expensive, rent as unaffordable, and used cars as overpriced. That perception weighs on sentiment more than macro indicators. Surveys are showing that consumers are increasingly pessimistic about the future, especially regarding jobs and affordability. Unless a clear economic win is delivered, such as a sudden drop in gas prices or a meaningful wage boost, confidence will likely remain stuck at subdued levels. Historically, low confidence tends to lead to weaker spending, particularly on non-essentials. That puts pressure on retail and services over the next quarter. The deficit is going to keep widening. That's a quiet problem, but a real one. Interest payments on the national debt are rising as rates remain elevated. Meanwhile, there's no sign of fiscal restraint. Trump's political platform includes tax cuts, possible entitlement spending increases, and huge tariffs, all of which either reduce revenue or increase outlays. If enacted, those policies would worsen the deficit quickly. Even without new legislation, slower GDP growth means lower tax receipts, while safety net spending, unemployment benefits, Medicaid, etc., tends to increase. So we can reasonably expect the deficit to grow faster than anticipated, even in the short term. That won't blow things up in 100 days, but it adds pressure to an already unsustainable debt path. Now, to put it all together, the U.S. economy over the next 3 months will likely shift from resilient but uncertain to fragile and slowing. GDP growth will soften, inflation will stop falling and may even creep back up. Job growth will remain weak, and unemployment will rise gradually. Consumer sentiment will stay low or drop further. The deficit will expand without a clear plan to reverse the trend. Markets may stay stable if no new shocks emerge, but the foundation is wobbly. If Trump ramps up tariff talk or undermines institutions like the Fed, volatility will return. In short, nothing Trump is doing right now is likely to stabilize the economy. His messaging may appeal to his base, but his proposed actions, especially across trade and fiscal policy, are more likely to trigger inflation, stall hiring, and undermine confidence. The U.S. economy isn't in a freefall, but it's approaching a tipping point. One misstep, policy, geopolitical, or financial, could easily push it into a much rougher place before the year ends. That's my read. What do you think? Is the economy actually booming? Or is this just Trump running on vibes? Drop your thoughts in the comments. I want to know, have you personally felt the boom or just seen the headlines? Also, don't forget to like, subscribe, and hit that bell so you don't miss what I've got coming next. And if you want more AI breakdowns like this, check out the video Sam Aways. Thanks for watching. See you in the next one.